Welcome to Elevate, the podcast where we dissect exceptional achievers who are consistently raising the bar personally and professionally to produce extraordinary results in investment real estate and ultimately in their lives. Now here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here, and I'm blessed and grateful for the second time to be sitting here with my friend, John Casmon. John, how are you, sir?
I'm doing excellent, Tyler. Thank you for having me again.
Love it, man. It's unfortunate that we're not sitting shoulder to shoulder, but it's probably good because maybe you might have the coronavirus, I might have the coronavirus. I don't know, but it's crazy times we're living in, huh?
Yeah, this is it's crazy because in some regards I feel this is unprecedented, right? At least in our lifetime. I haven't seen anything like this, and I've been trying to compare this to something, and I think 9/11 may be the closest thing that I could compare this to, just the uncertainty, the frantic nature of things, the running out and filling up on gas and toilet paper and all of that. But it's not even that. I mean, I was watching this documentary called Pandemic, and I fell asleep on it. So my wife probably knows more about what happened. But it talks about the bird flu and just like going back to like 1918 and the craziness that was happening then and how many people actually died. And it's just a good reminder that while it's easy to brush off these things that happen as scare tactics or media hoax or whatever you want to call it. The reality is that things can get really out of hand if you're not proactive. And at the end of the day, we all owe it as a responsibility to ourselves, our family, our friends, and the general public to do what's best for ourselves to stay protected and healthy and not either contract the virus and definitely not to spread it if you can.
Yeah, no, absolutely. I couldn't have said it better myself. It's certainly one of those events that's like, man, you didn't see this coming. And I'm reading a book right now called The Black Swan, and I guess maybe memorializing the whole situation, but it certainly feels like a black swan. It's impacting so many people's lives, but you know what? One thing this made me think of recently is that there's a lot of people, in my opinion, that look at this and say, all right, this is my excuse. This is my excuse. And of course, we've got to be smart. We have to be smart. You have to, do what you have to do to protect yourself, your family, your loved ones, and other people. You got to be smart about how you can potentially hurt other people by not, being vigilant and so on and so forth. But I also think that, it's March, what is it? March 13th today. We're sitting down and we're 2 months, removed from January 1st when people said, hey, you know what? I'm inspired about 2020, the next decade. Let's do it. We'll do anything it takes. And now, you have an opportunity that, that it could be a roadblock here. And it's like, all right, are we going to go through the roadblock? Or are we just going to really stop and say that this is our excuse? I just find that is the other piece of this whole situation. Do you see that?
Absolutely. I mean, I think you're spot on, right? I mean, everything that happens, is either an opportunity or an obstacle. It just depends on how you want to look at it. And I think this is a huge opportunity for a lot of people. If you can take advantage of it, it's a great chance. I mean, think about how we've all been talking about the scarcity of deals and how things are overpriced and it's so competitive. Well, there are probably going to be a lot of people that step back and say, you know what? I don't want to do this. So for those of you who have been looking for opportunities, it's a great opportunity. This is it. This is a great opportunity to get in, and you're probably going to have investors who are looking at their stock portfolio, who are ready to pull out that capital and put it to work for something else, who recognize that they need more diversification in their portfolio. There's a lot of opportunity, and it just really comes down to the actions and the steps that you're taking to stay ready, right? I mean, just to stay ready. I don't say get ready. I mean, stay ready, because you should have already been ready, but hopefully you're taking the steps to stay ready. And if you haven't been ready, now's the chance. Now's that time, the opportunity to get there. And by all means, what we're talking about is really being intelligent and sophisticated and not being aggressive and just swinging at the wind, but continue to take shots and just identify your opportunities and where it makes sense to place bets and to take some mitigated risk, but be mindful and responsible, but make sure you stay in the game. Don't use this as an excuse to tap out or to run and go do something else, but find the opportunity and make sure you take advantage of it.
Stay ready is absolutely a great message that we all need to be, you know, kind of anchoring within our own identity, staying ready. What can we do to train ourselves for each and every unforeseen moment? Because you know what, life is uncertain, business is uncertain. So what can we do to stay ready? So, man, with that said, what a great way to start the conversation. I want to welcome Elevate Nation back to the show. Our mission is to identify and apply how the best of the best raise the bar personally and professionally to achieve greatness in real estate and beyond. We're going to take it to another level today because, we're going to talk about mindset. We're going to talk about strategies. We're going to talk about habits, routines, systems, tools, to elevate to a life without limits through real estate, through personal growth, through staying ready, through training ourselves and elevate to a life without limits. So we can do that for others as well. It doesn't just have to be, something that we hold within ourselves, but this is a masterclass for leaders and those looking to achieve uncommon results and purposeful outcomes through real estate investing and ultimately in their lives. And certainly I just want to make a plug. If you're enjoying the show, please subscribe to it, give us a 5-star rating, a review. It helps. We're trying to reach this message to millions of people because the next coronavirus that comes along, we're all going to be staying ready at that point. We're going to capitalize. We're going to create opportunities. We're going to create safety and prosperity for others. But with that said, I want to introduce you again to my friend, John Casmon. And John is a real estate entrepreneur who has partnered with busy professionals to invest in close to 90 million worth of apartments. John hosts the Target Market Insights podcast, where he covers multifamily and marketing insights. In addition, he is the co-creator of the Midwest Real Estate Networking Summit, a no-pitch event to connect like-minded investors, which is coming up in May, right, John?
That's right, May 16th and 17th.
May 16th and 17th. We will absolutely put links in the show notes so you can learn more about that and so you can get your tickets then. And also wanted to just wrap up, the introduction here with, John, with a background in marketing. He has overseen campaigns for General Motors, Nike, and Coors Light, amongst others. John was even recognized by Black Enterprise Magazine as one of the top executives in advertising and marketing. And so, John, with that said, man, I know we've already had one very brief discussion, prior to this in Colorado, but tell the listeners a little bit more about John, the man behind the bio.
Yeah, I mean, it's interesting, whenever I hear the bio, I never know where to start, right? So it's like, how much time do you have? What are we going to talk about?
Get comfortable here.
Yeah, exactly. Well, I mean, I think the big thing is for many of your listeners, right? We're all trying to elevate, right? We're all trying to figure out how do we take our lives to the next level. And for me, I think the appropriate place to start is, in corporate America. So I was working in corporate America, living the dream, as they like to say. And I wasn't really living a dream, in some regards, things were great. I was a young executive. I was being recognized by different publications and had a big ad budget to go out and do fun, cool projects. Went out to Super Bowl and the Final Four and, TV sets and Hollywood parties and all that kind of stuff. But as I looked up at my bosses and the lifestyle and work-life balance, that just didn't seem to be there. And at the time, it's kind of eerie because I worked there from 2007, or in my first big corporate job at General Motors, from 2007 to 2011, where we went into bankruptcy and had the economic downturn. So as we're sitting here and watching the stock market kind of collapse in front of us, a lot of this feels somewhat familiar. And I will tell you that one of the big challenges was sitting there trying to figure out your options. Because if you tie everything to your job, to your stock options, to, again, kind of the life that corporate America has created, you feel a little bit trapped, and you kind of bought into this dream or to this expectation without really having the ability to control what happens for you. So, anyone who's listening to this, if you're in that situation, you may be trying to figure out, okay, well, how can I get control back? How do I, while I love this job, or even if you hate your job, how do I stay in control of how I take care of my family, how I earn an income, how I, diversify all these different things? So at that moment, I kind of turned to real estate. I didn't really know how to get started, but I knew real estate was the one thing I kept hearing about and reading about that felt like the right avenue for us. So essentially, I ended up leaving gym and moving out of Detroit and moved to Chicago when I got married with my wife. And we sat down, had a big conversation, and we knew real estate was something we wanted to be in, specifically multifamily. So we kind of started with the house hack and then, really started to build the portfolio from there.
I love it. I'd love to take it back, a few steps as well, like growing up. I mean, did you have that entrepreneurial spirit as a kid? And if so, could you maybe give us an example? And if not, maybe tell us that as well. But I'd be curious to know, was there any moments early on that you sort of identified that you were creative and you were resourceful as entrepreneurs are?
Yeah, it's funny because I'm kind of I like to think of myself as a balance between the entrepreneurial upbringing as well as that kind of just a solid employee, right? So I was entrepreneurial, but I always had a great, framework of how to create. So my first, call it a hustle. It wasn't even like an entrepreneurial skill, right? My first hustle was like candy. I was like in second or third grade and would buy, I don't know if you remember, man, or how old you are, but they used to have these blue blow pops that came out, you
Oh
know,
yeah.
and I remember when they were new and we bought them. There was a corner store right around from the school. And I bought like, I don't know, like $3 worth. They were 10 cents. So I bought like $3 worth, which is like what, 30 blow pops or something like that. And then I took them to the school and I'd sell them for a quarter. And I did this for like 3 days and I was doing great. You know what I mean? I was hustling and set them in the back of the class for a quarter, making 15-cent profit each one. And of course, my teacher kind of saw me in the back and pulled me to the front, called my mom, told her what I was doing. And that crushed that business. And the next one was I think still same grade. It was video games. So this is before you had like the different exchanges out there and all of that. So I'd have a game, people get tired of playing it. I would go and trade them and sell them with a little bit of an upcharge to other kids. So we would get Blades of Steel or whatever Nintendo games and sell them to other kids at a little bit of a premium. And same thing happened. Teachers saw me and called my mom, and that was the end of that business. So to an extent, we had. I used to go into nail salons and hair salons. My stepmother used to buy these gloves, a box of gloves. She got them for $1. I go into the salons, a little cute, 10-year-old kid, and I'd sell them for $3, right? So that's when I really learned about business because in my head, I got $3 for the box of gloves, and I was going to split that with my partner 50-50, and when we got back to the house and started breaking it down, my cut was small because I didn't negotiate my pay up front. So she was like, well, there's $1 for the box, right? Or for the gloves. So you got to take that off first. And then there's gas. So I drove around the city for you to sell these. So I got to take out the gas money. Then it was my idea, and I did everything. I put up all the capital to make this thing happen. So I'm taking a larger chunk. So I did all that and I made like 30 cents a box. And I was like, I quit. Because this is a job. This is not the business I thought I was getting. I quit. But we sat down, we had a deep conversation about business and about McDonald's. And if you go order a burger at McDonald's, you don't get to keep the money as the cashier, right? Like there's big overhead. There's the cost for the product. There's cost for all the infrastructure. There's real estate costs. So that was the first time I really started to understand the real business side of entrepreneurialism and anything, right? So all the costs that get involved and just how to structure deals. And the biggest lesson I learned was negotiate your compensation up front so you understand what you're doing and you're not in a situation where you've done all this work and you're getting just a measly piece of the pie.
Are you someone who is looking to seriously elevate your life this year? I mean, now, this year, 2020, because I want to let you know that I am currently opening up a few coaching spots for people like you who want to close the gap from where you are to where you want to be. And I want to invite you to visit coachwithtyler.com. Again, that's coachwithtyler.com. I have to tell you, this is not for everyone. This is only for those who are defiantly committed, those who are decisive, those who are coachable, those who are resourceful. They're willing to do whatever it takes. They're willing to sacrifice time, energy, and invest resources into themselves to get to where they want to be, to live life at the highest level, and to elevate to a life without limits, exactly what we talk about on this show. If that is you, I invite you to visit coachwithtyler.com. Again, that's coachwithtyler.com. Walk me through the emotional residue of this experience as, a child who's creating, opportunities or creating sort of margin with, certain products or whatever it may be, whether it's a blow pop or, a video game or what have you. Talk to me about, how did that feel as you started to find these opportunities and you started to realize you're creating value? And then also when you got shut down maybe a couple times, and then also when you learned, wow, there's actually overhead, so maybe I didn't budget appropriately. Talk to me, what was that progression like?
Yeah, I mean, I think starting out, like, you certainly weren't thinking about the business implication. We just didn't have a whole lot, and I was pretty scrappy. And I mean, I walked a lot. I walked to school. My mom would give me money for the bus. I'd pocket it and I'd walk so I could save $5. So that was the kid I was. I was a kid. You gave me $10 to buy bus tickets. I put $10 in my pocket and I walked to school and I walked home, and I looked at it as $10. So then I took the $10 and bought the blow pops and did whatever. So I mean, I think I don't really see it as being entrepreneurial or even enterprising as much as being a bit resourceful with the means that
Hmm.
I had available to me and trying to figure out how to stretch it, right?
Hmm.
Getting shut down was something that you kind of anticipate, right? I mean, it's against the rules, so you kind of anticipated it, but just not really understanding the why behind it. Or what I wish I could have done back then was figure out how. If I could have asked one more question, well, how can I do this without getting in trouble? To both my mom
Mm.
and to the school, that probably really would have opened up the doors. It's like, oh, it's just not here on the school grounds. Okay, great. Let me do it here. Let me do it at recess. Let me not. It's just not in class, but just understanding the rules a little bit better. So we probably could have made better decisions. But I
Yeah.
think the residue of it really is about perseverance and continue to educate yourself. I would say anything. The glove business was a one-time thing that I thought was going to be and we spent a few hours driving around the city, and I was like, man, I just made $60 in my head. I thought I made $60. So to do all that and get $20, I was like, oh man, wait a minute. I just, like, for 3 hours to get $20, like, no, this is not worth my time. This is not, and this business doesn't work without me, because no one's going to go buy these gloves from an adult. They need a little cute kid to go in there. So it's like the Girl Scouts, right? If you had grown women walking around telling you they had these Girl Scout cookies, you're like, I'll just buy cookies from the store. I'm good. But, a little cute kid comes up and she's doing it for a good cause, you'll stroke the check for a few boxes.
Yeah, no, I find it interesting. I'm curious, with this experience, how did this, looking back, did this really impact you into how you're an entrepreneur now, how you're an investor now? Or was it more so, hey, look, I've always been resourceful and I continue to, go down that path of doing anything it takes? Or, was this experience something that supported you in the growth that you've had as an entrepreneur?
It's interesting because I think I pivoted, right? So I think I went from focusing on the entrepreneurial side to focusing more on how do I create sustainability, right? So it was less about swinging for the fences and trying to, just create. And it was more like, hey, how do I get a great job that's going to pay me where I don't have to worry about everything working all the time?
Hmm.
And I think I kind of pivoted to that once I had my first real job, right? At 13 years old, I had my first real job. And it was like, oh, you guys are going to pay me. All I have to do is show up, basically, show up and do what I would probably do anyway. And you guys are going to pay me a set amount of money. Great. And I think as you're young, it's a fallacy that you get caught up in, but it's great because I knew I was going to make X amount of dollars. So all I do is show up. If customers came, they didn't come, not on me. I didn't have to solve everything. I just had to show up for work. So I think that was it. But obviously, even in that, even in a place where you're an employer, for me as an employee, I was still enterprising in a sense of recognizing that there are challenges or better ways to do things. And, hey, maybe we should change the work schedule because, from this time to this time, we don't have that many customers. So why don't we go down to one cashier and, we could probably send someone home. Like, I was doing that at 16,
Hmm.
looking at the business operations and giving feedback. So that part of it and observing has really always been a part of it. So I think that's helped me in business and helped me understand what it takes to do a good job, to get it done, to not just look at a clock, see it's 5 o'clock and jet out, but understand, like, hey, no, there's an assignment, there's a project we're trying to do. Let's get it done. So I think that has always served me. I think understanding my compensation though has always been something I've been trying to figure out, and understanding your true value, because that's been the tricky part, is understanding, well, what am I worth? And even going back to that kid selling gloves, I was told, well, you were worth $20. I didn't think that was true because I knew the business couldn't operate without me. That was the last time we did anything with that business. Um, but I wasn't sure what it was worth. Was it worth 60? Was it worth 80? Was it worth 30? I wasn't sure how to quantify it. And I think a lot of people who work that W-2 lifestyle, it's not that they just love the job. It's not even that many of them love the comfort of getting a paycheck. I mean, that's certainly a big part of it, but I think they don't know how to value themselves. If you don't look at monster.com or, some of these websites that have a list of salaries, and you pick a salary that you feel, you could take, how do you value it yourself? Are you worth $100,000? Are you worth $250,000? Are you worth $500,000 a year? It's hard to figure out that number without, taking some metrics and going out and interviewing or doing something like that. So I think that's really the hardest part, is just being able to place a number to your time and putting a value on what you provide from a business standpoint.
Yeah, and I think that employees, everybody says, it's like the hot word or hot button topic right now is that everybody should be an entrepreneur, and I don't believe that's the case. I think that there's definitely a time and place for you to operate within an organization and to create value for an organization. But I find it to be very interesting that everyone is a free agent. I think that that's kind of a little bit of a concept, maybe that's a shift based on the past several decades. And it may have not always been that way because folks have been so loyal to one organization. But being a free agent, you're almost an entrepreneur in an organization. So I think it's exciting to realize that you have an opportunity to add value, and then also understand your own true value, to an employer. Because employers, and entrepreneurs, the only way that they're going to be successful is if they build a great team. So I just think that the world can't go around if we're all just, lone wolves or whatever it may be. So I appreciate you highlighting that for sure. So talk to
Yeah.
me. Go ahead.
No, I was going to say, I think to your point as well, it's um, the part that people miss is, especially if you want to be in multifamily investing or some of these other things, a lot of times you have to be a part of a team. You know, if you really want to be a lone wolf, you want to buy 8 units and that's your break number, cool. Like, you can absolutely do that. But if you want to do some of the large deals I know you're doing, that we're working on, um, you can't do that by yourself. So whether you're collecting a W-2 salary or you are a general partner on a deal, the workflow, the freedom, whatever you want to call it, there's still amount of work that needs to get done, and it requires a certain mindset to be able to do that. So just understanding that those things are not mutually exclusive, and it's great to just have the right mindset and figure out what opportunity, whether you're working a W-2 job or you're working within a partnership, or you just want to do your own thing. If you truly just want to do your own thing and just have financial freedom and get step out of the regular work life, completely understand that. That's a whole different scenario. But I do think that a lot of people actually enjoy working with people. Even as a solo entrepreneur, you probably still have clients. So either way, I mean, if you work for a law firm or you have your independent practice, the work is similar. You're just trying to figure out, how do you get compensated for it, right? If you feel like, hey, if I do this for myself, I might be able to make more money. That makes complete sense versus the person who just says, hey, I hate corporate life. I hate working a job. I just want to go buy 3 single family houses and live off of that. Completely different dynamic.
Yeah, for sure. Yeah, what we're talking about is doing big things and exceeding the limits that many have placed on themselves. And with that said, John, I'd love to know what are you doing now to raise the bar in your business? I know you guys are acquiring multifamily assets in several markets and doing big things. So I'd love to know how are you raising the bar?
Yeah, I mean, the biggest thing we're trying to do is focus on our investors, right? Building out our investor database, connecting with people, learning more about them, what they're looking for. As we're talking today, there's obviously a lot of unrest with the markets. What's going on? What should I be investing in? What's our plan? Should we be refinancing properties? Should we be buying more properties? Should we be selling properties? There's a lot of questions that we're fielding and conversations that we're having with investors. But the biggest thing we're looking to do is continue to elevate those conversations, bringing new investors into our portfolio and into the mix, and continue to find good deals that make sense to operate. So the way we do that are, having conversations like this with you and your audience, continue to build our brand to connect with others, working on a lot of our marketing tactics and strategies to continue to kind of cast a wider net, as well as looking at more deals and identifying the right partnerships to continue to grow, to excel, and to elevate our business.
Yeah, I love the plugs there for elevate a few times. Elevate the conversations, elevate the business. I appreciate that.
Only the last one was intentional. So if I did it otherwise, that was good and natural.
We have planted the seeds into John Casmon's mind, everybody. I love it. I'm excited. So talk to me, if you're a passive investor in today's environment, right now it's March 13th, 2020. Coronavirus is going crazy. People are going crazy. Obviously people are asking about refinancing. Of course, I mean, that's been one of the heaviest things that we've been working on this week as well. Of course, interest rates continue to fall, and perhaps they're stabilizing, at least for over the past couple of days from what I'm seeing. But what are passive investors specifically discussing with you over the short term?
So, I mean, I think there's there's the existing properties where, hey, with the market doing what it's doing, is there an opportunity to take advantage of it? And it kind of depends on the deal. Most of our deals, there really isn't an opportunity right now because we're in the middle of the value add for a couple of them. We have prepayment penalties on other deals, and we're not far enough along in our execution on other deals, right? So there really isn't for us at this moment. But I will say that if you're in a deal and you're going to refi in 6 months or 4 months, it may be worth taking a look to say, hey, let's go ahead and do this. Let's refi. From an investment standpoint, is now the right time to be investing in multifamily? I say yes, but I also believe that there's always the right time to be investing in multifamily.
Yeah.
And the reason I say it like that is I think too many people try to time the market. If you want to time the market, multifamily investing is probably not the right thing for you if that's what you want to focus on. Multifamily investing is about the long haul. Even if you're doing syndications with a 3 to 7 year hold period, it's still about the longer term trajectory. It's not like flipping a house where you're trying to get in and out in 90 days or 120 days or something like that. It's not wholesaling. It's not, time in the market where you're going to wait for the Disney stock to plummet and then pour in and get it at an option or something like that, right? So because of that, I think the consistency is the most important thing. Buying multifamily allows you the flexibility to sell when it makes sense to sell. And if you're putting the proper loans on these properties, you can wait it out, whether the market's great, hopefully it continues to rise. If it starts to dip, hopefully you can wait it out until it starts to correct. But the beauty is the reason you can do that is you're getting cash flow in place now. So you get that cash flow and then you pick and choose when it makes sense to sell. So it's a great time to remind investors of that. These are some of the benefits that we've always loved. This is part of the reason you wanted to diversify in multifamily, to shield yourself a little bit from the chaos of the stock market. And that means not riding the roller coaster as high as it goes, but it also means not falling as low as it dips. And you have something that is giving you cash flow that is going to be a great hedge against inflation, but not to mention that you still have these awesome tax benefits that you can take as well. So we're just reminding investors of those things. And I think it's a good point to look at it. And the other thing that is really important is with stocks, you can always see the value of your portfolio. And people don't talk about this enough, but there is a psychological component where if you can look and see that stocks drop 10% today, and you look at your portfolio and you had $1 million and now you have $900,000, you just lost $100,000. With multifamily, you can't do that. You can't just like, oh man, I just lost 10% of value in my real estate portfolio. If the cash flow is there, you don't even care. The value only matters the day you buy it and the day you sell it. So as long as you have flexibility to determine the day you sell it, you're going to be good. As long as it's a cash flowing asset and you have, components built into your model where you you anticipate higher vacancy and things like that, maybe some economic vacancy where people maybe are struggling to pay rent. So you may have some people who have a harder time paying rent during these rough times. But if you have that built into your model, um, the value of it doesn't matter as much. And when you have that stock market, the reason it's important is if you see it drop 100, 10%, and you lose $100,000, naturally you're thinking, what happens if it drops another 10% tomorrow?
Yep.
Do I stop the bleeding now or do I ride it out? And if that continues to compound, the anxiety starts to kick in. It's like, well, what do I do? And inaction doesn't feel right. Doing nothing does not feel like the right answer, even if it is the right answer. And that's the hard thing that you have to struggle with as an investor is, you can pull your money out and you're not taking action, but you're just watching it fall, right? And it's tough for people to just sit there and watch it fall or to react, especially if that's not your nature. So that's the hard part as an investor. And I think you have to kind of understand yourself a little bit more and to ask yourself, can I sit here and literally look at it and just watch it drop? Or do you set it and forget it and never log in? Don't double check what it is, rip up the reports. You don't want to know, don't want to care, just straight up, put your head in the sand. I think those are your options, right? And it's kind of tough to either be in either camp because one is of ignorance and the other is just straight anxiety and panic. So it's kind of tough when you are focused on the stock market. But again, multifamily gives you more a peace of mind as long as the underlying components of your underwriting and the deals you're in are solid.
Yeah, I mean, very well said. And, one of the things that I wanted to, a few things I wanted to highlight there, because there's so much wisdom, is number one, timing the market is probably not going to be in your best interest, no matter what you're doing as an investor, because you know what, the world is all about unforeseen events. It's all about uncertainty. It's all about, the unexpected. So I think expecting the unexpected is probably a good practice to undertake within your own philosophies. But the other thing that we love about real estate is that it's illiquid to a certain degree. And even if you're investing in a syndication and your expectation is to hold for 3 to 7 years, you should still have the potential outside contingency plan that you're going to hold that deal for longer. And so what does that look like? And is that cash flow still something that you're interested in from that trajectory? And because timing the market, I mean, no one can predict this. Everyone, I remember you and I, we were in Colorado, what was it, a month ago, 3 weeks ago, and we're talking about what is the how much longer does this kind of trajectory go? And we're talking about, well, we may be in the 12th inning of the 9th inning game, but you know what, we probably have 5 to 7 years. Who knew that 2 weeks later, this total unforeseen event now is quarantining the largest GDP on the planet in terms of the United States of America. Of course, many other countries. I mean, the entire planet is impacted by this. So I just find it to be so fascinating. You can never expect what's happening next. So as an investor, what do? You've got to, sort of cultivate the appropriate psychology, one of which that, has some equanimity that says, hey, when times are good, I'm still being vigilant. And when times are challenging, I'm I'm not panicking. I'm not overreacting. So I'd be curious as to, how does psychology sort of, what kind of approach do you take as an investor yourself and also a leader of other investors in terms of cultivating an appropriate psychology to be a successful long-term investor?
First of all, you said equanimity. Is that the word you said?
Equanimity. Yes. Are you familiar with the concept?
I've never even heard that word in my life before, man.
Google it, baby. Google it. I love it. So I learned about equanimity from a meditation teacher a couple of years ago. And really what it's all about is staying in the middle. It's like when the highs are up here, the lows are down here. So you're disappointed, you're down in the dumps, you're on the lows, right? You're excited, you just had a big win, you just closed a huge deal. Your ego's feeling very happy about itself. You're all up here. So the question is, how can I stay in the middle? And so equanimity is all about, what? Everything's impermanent. What? Today is what it is. Tomorrow is what it is. This moment will pass, whether it's good or bad. Everything's impermanent. So, I think it's a practice, something that I've had to, actually, I was talking to somebody about this week, is that, I feel like I've been training for this moment, this moment for, the past 10 years or so. It's like, everything's been good, but what do we do when things are bad, right? How do we handle that from an emotional perspective. And that's why I ask about psychology, because I see a lot of panic. I get people calling me. It's like, what should we do? You know, what's going on? It's like, look, guys, like, let's take a deep breath here. I mean, what do you think about that?
Well, one, I'm going to say I love the vocabulary, and we're going to incorporate equanimity into our vernacular for the next week, just to see how
Yes.
many people ask me about it. So I have to give
Tell
you a
them,
shout
tell
out
them
there.
Elevate Nation told you about that.
Listen, I'm a very accomplished reader, so I'm just going to tell them that I've read it in a book and wanted to incorporate it into
Okay.
my vernacular. No, all about Elevate Nation. So, I think you hit on a couple things, right? As anyone who's an investor, part of what we have to focus on is calm, staying focused on underlying principles, and not getting overly emotional about decisions. It's very easy to do that. As an example, I got a call earlier today that we did not win a bid that I was in for best and final. There were 20 offers put in. We were in the top four, and we came back with our best and final offer after talking to a couple of folks that I really respect, and got some consultation on their take on the deal. And we came in what I felt was a pretty good offer, pretty strong offer. And the broker called me back and basically told me, listen, we have a couple of offers that are $500,000 more than yours. We have $100,000 hard cash day one, and we have a 45-day closing window. And I'm like, yeah, those are all better terms than what I could give you right now. So makes sense, right? Now the emotional thing is to try to run and bump up my numbers and, oh yeah, we can do this, we can match
Right.
it. But we had other concerns with the deal, so it's time to pass. And I think the key is you have to stay true to your process. Continue to swing, continue to take shots, and focus on the process, not the results. And in this case, I'll use it to real estate investing. How many deals are you analyzing? How many offers are you putting in? I think if you focus on those two metrics, understanding what your criteria is, if you focus on those two metrics, you will know success. And you should, maybe on a quarterly basis or every month, you should figure out, hey, am I doing enough? Should I be taking more shots? Should I be underwriting more deals? Should I be looking at more opportunities? And that will inform, do you switch markets? Do you change your criteria, whatever? But focusing on the two fundamental things is really what's key. It's like if you're going to be a great athlete or a great basketball player, well, how many shots are you taking a day? Focus on that. Don't focus on how many you make. Just focus on getting to the gym, taking 1,000 shots, 500 shots, whatever it is. And that's something that, I continue to work on myself as well. And when I look at, okay, hey, we didn't have success in the business, then you go back through the journal and say, well, how many deals did you underwrite? Well, not enough is the answer, right? Not enough. So you have to understand some of that we can't control, but on the same note, you have to continue to stay disciplined. I think that's really the key, is figuring out what you need to do and do those things, and don't let the outside noise get to you. I was at an event, and I was at an event and someone was talking about the outside noise, the pressures from kind of the Facebook group, and looking at peers and the success that other people are having, the deals that they're closing, and letting that really make them feel like they're not doing enough, or the deals they are doing, which were smaller units, feeling less significant, right? And that's just not true. I mean, you can't really let what other people are doing change the way you view yourself, unless you see that you're playing small and you could be playing bigger, and you want to use that as proof points to say, hey, I could probably be playing at a bigger level. I think that's fine, but you should never disqualify the things that you're already doing, or discredit the actions you're taking. Just find ways to step your game up and put in a little bit more work. I think just staying even keel is a skill, and it takes practice, but you kind of have to lock into what you're doing, the processes, and fall in love with the mundane process and those mundane steps to really see the progress and the results that you're looking for.
Yeah, and it's not an easy thing to do. I know that for sure, is focusing on the process and not the results. Obviously, if you can control the controllables, that's the wise thing to do. But, you know, I know myself and many who are listening today who say, well, man, come on, it's all about results. At the end of the day, it's all about results. At times, that's our thought. At least that's the voice in our mind that tells us that. But I know that you would probably agree with this, is that the results come when you just focus on the process. You fall in love with the process, and you fall in love with the mundane, as you mentioned. So talk to me about, what does that mundane look like for you? I mean, what's the day in and day out process look like from John Casmon's corner?
Mundane. That's what it looks like. Um, there are a couple things, right? So one, you're right. Let me go back. The results do matter. And the key, though, is to analyze what you're doing that can lead to better results. Because at the end of the day, you analyze 1,000 deals and you don't do a deal, you're gonna feel that, right? I mean, it's gonna be discouraging. You're gonna be disappointed, but I think you do have to focus on, hey, I did my deal a day, or I did, whatever that step is, and then what you can do if you're doing those steps, just like anyone else. I mean, if you shoot 1,000 shots, but you're still shooting a 20% rate, part of what you need is a coach or someone to look at you and say, yeah, hey, flick your wrist like this, or do this, or pivot, right? So you need that coaching to take a look at what you're doing so they can help you adjust. And it's the same thing here. If you're putting in the work, then it's a matter of, okay, well, let's take a look at what you're actually doing and figure out where you're missing opportunities or how you can adjust your game. And sometimes we just got to humble ourselves to ask, you know, if you see somebody doing deals, sometimes you won't like the answer, or it may not fit or mesh with kind of your belief system or your thought process, but at least you can understand more of what's going on. As far as the mundane for me, it starts with trying to wake up as early as we can. We're at 5:30 now. I would try to get to 5, but it gets difficult. And I say try just because there's a back end to it, right? How early I go to bed impacts how early I wake up. So, and then also how much we have to do in a day. Taking a look at what we do, we have the podcast, we have the different marketing tactics to go out and reach people and communicate our voice and our message to other folks. We analyze a certain number of deals a week, so we're looking at increasing that, but also trying not to over stress, because the other part of this is you just feel like you have so much to do that you get burned out, or you feel like, again, that pressure kicks in, the anxiety kicks in, and figuring out what you can offload on your plate. So just really trying to take inventory of, what am I doing on a daily basis? What's successful? What's working? What's not? What do I hate doing? And how else can I get this done? Can I just delete this? There's like 4 Ds, right? When something comes across your plate, you can either do it, you can delegate it, you can delete it, or you can defer it. And those are your options with emails, with any conversation, with any project or any next step. Those are the 4 options you have. So just constantly evaluating those things. Is this something that I can do later? How long will this take? Can I just do it now? Can I delegate this to somebody else? Can my VA do this? Can my analyzer do this? Or my analyst do this? I mean, or is it something that's not really important to me? We can just delete. Like, I don't know. We're not going to do it at all. So just kind of going through that, I think is really important to do that on a consistent basis and put those kind of things on autopilot. And then I would say the other thing for us is recognizing that we have some non-negotiables. And if you can get your non-negotiables to the point where they're automated, it makes life easier. For instance, the podcasting, you know, it's it's become a non-negotiable for us. We do the podcast, we're recording our shows, we're putting out our content, we are connecting with other investors, we're getting our word out there. I don't need a push for that. I don't need a reminder for that. I know twice a week my show needs to go out. My editor's working on the edits, kicks it over, we do what we do, we make sure they go live. So that, I don't want to say it's autopilot, because I still have to record the episodes and just kind of have the forecast and all that. But there are other things that are more difficult. Like, I don't really love underwriting. I'm good at it, but I don't love it. So I have to force myself and time block to say, okay, when I wake up in the morning, we're going to underwrite one deal before I do anything else. We're going to underwrite this deal. We're going to go to the numbers, and we're either going to put an offer, or we're going to kick it to the rest of the team and get their take, right? So you have to kind of time block, or I had a woman on my show, Karen Briscoe, and she talked about activity blocking. So it's a little bit of a nuance, but activity blocking. So there's set time for the things that are important in our business but are maybe easy to fall off the plate because they're not as time sensitive. The good thing about the podcast is they're time sensitive. They go out twice a week. So either it's ready to go out on Tuesday and Friday, or it's not. So it's easy to hold myself accountable to a real deadline versus analyzing the deal. Okay, well, when's the offer due? The offer's due in 5 weeks. All right, well, I don't really have to analyze that today. So those are the things where trying to just get ahead of it and be more disciplined are really key to yourself.
How did you, just out of curiosity, how did you categorize your non-negotiables? And I mean, was that a process for you? Was that a brainstorm process with others, or how did that work for you?
You know what? I'll be really transparent with you here. I'm really good when it comes to public accountability. Okay. So it's pretty easy for the world to take a look and ask them. And right now, my podcast is supposed to be out, and it's still not out. So when we hang up, that's what I gotta hit the publish button, right? But I'm good with public accountability because the world can see that. They can see whether I did something or not. The world's not worried about whether or not John stayed up last night and analyzed the deal, or if he did it this morning. you know, and that's where it gets a little easier to slide. But when it's public stuff, it's easier because we care about our reputation, we care about the way we're perceived, we care about all of these vanity type things, right? It's not just vanity, by the way, but it's important. So if you notice, people who are really successful, they typically have some sort of public awareness of what they're doing. Let's take a Gary Vee, for instance. Um, we know Gary Vee posts every day, right? He's out there every day. Now, if Gary Vee just went dark, you would be like, what happened to Gary Vee? Is Gary okay? Like, what's going on, right? We have other podcasters that put out daily content, daily shows. The consistency is such an important aspect of building a brand or building a reputation that just that one alone, ideally, you have good content too, but being consistent is probably the most important thing to outlast the others. That's a telling thing. So I think that's an easy non-negotiable. Then I think you have to break it down to the fundamentals of your business. The reality is our business is set up on doing real estate deals. If we don't do a deal, we don't really have a business. I have nothing to put an investor into, so nothing moves until we have a deal. So finding a deal and taking the steps to consistently pursue deals, that's another non-negotiable. So we always have to look at that and ask ourselves each week, well, what's preventing us from doing a deal this week? Okay, well, we didn't analyze enough deals. Okay, well, how do we do that? Well, we need to, get more deals flowing into our system. So we kind of reverse engineer those challenges and try to review it. And oftentimes we can't control the outcome. I mean, we have sellers who have told us they will sell, and it's been 2 months. We're still trying to get under contract. We have deals where brokers have told us they like our offer and we're going to get it, and nothing. And there have been times where you reach out to try to get some deal flow and no one has anything, so there are things that we can't control, but there are other ways around that, because again, the pivot is you can expand markets, you can expand your criteria, you can look at other ways to increase your deal flow. You can create your own marketing program or your own direct to seller campaign. So there are other things that you can always do. So for us, it's about just constantly evaluating those things, and make sure we're not taking so much on our plate that nothing moves forward, but trying to figure out what is the challenge that we're facing, and how do we overcome that obstacle.
I love the just really distilling it down to really simplicity in terms of, in your business, as an example, nothing moves until you have a deal, and asking yourself a great question of, hey, what's preventing us from doing a deal this week? Because at the end of the day, that's really the fuel that runs your organization. And so I know we can all ask that question of ourselves and of our business, and really kind of distill it down to what are your non-negotiables with that said, and automate them to a certain degree. So ton of wisdom there. And John, man, I want to be really respectful of your time and transition really quickly. I know we've done this once before into our rapid fire rare air questionnaire, but maybe you'll have a slight different approach here in thought process today. But we did talk about a couple of books last time. I'd be curious to know, are there any other super impactful books that you would share? I know I see the beautiful bookshelf behind you that have been impactful for you in your business.
Oh man, so there are a lot of books, right? We love to read, and I have probably 3 times as many books on my phone now as I found the Audible is just amazing for me to plow through these books. And it's always constantly getting better at skills, right? So there are a few different books. I know we talked about Atomic Habits last time for sure. And did we talk about Can't Hurt Me? I can't recall.
We did not actually. No,
All
I don't
right.
think we did. Yeah.
So Can't Hurt Me is another book that was just amazing. And I like to read physical books, but this one in particular, the Audible is the book plus a podcast after each chapter, and it is impressive, man. I mean, this guy David Goggins goes into great detail as far as what was going on in the chapter, his mindset. He provides some context that probably wouldn't have been as cool in the chapter, but it's a great read, and his personality is just a great one that jumps off the page, but then also when you're listening to him, you really understand his story, and it's remarkable. So anyone who feels like you can't do something, or you're struggling, it's definitely a great book to check out. So Can't Hurt Me by David Goggins. That's another really great one to check out.
Yeah, and I've heard that the Audible version is absolute must listen. So
And
we'll
it's
definitely.
long though. It's long. I will
Is it?
say it's like 13 hours.
Okay.
So it's not like you're gonna put it on and check it out in a couple hours. Like it's a 13-hour
Wow.
session. So it will take you a week or so, or maybe a couple weeks to get through it, but it's really good.
Absolutely. So we'll definitely put a link in the show notes there. But we actually already talked about this. How do you best elevate your life on a daily basis, and how do you elevate others around you? So I'd be curious to know, beyond that, what is your driving force? If you had to distill it all down, with everything that you do, what's the driving force behind what you do?
Transformation. You know, we kind of started this conversation by talking about my childhood and hustling, trying to make 15 cents on some blow pops, and um, those 15 cents were big, man. I mean, it may not sound like it. I know I'm an adult now, but I don't mean big from like a child's view of 15 cents. I mean, we struggled to put together a few dollars. I mean, I remember distinctly having field trips where I needed $5, and I would go ask my mother, and she didn't have it. She would call, her brothers and other people and see who could give me $5, or she'd have to give me her parking money, to do it. So that notion of me pocketing my bus fare money, it wasn't me being like shrewd or me being just entrepreneurial really, as much as it was necessity. I didn't know when I would need $5. I just didn't know when I would need it. So going back to that kid, in some ways, I still see that kid from time to time when I look in the mirror. I still see the kid who struggled and hustled and always did it by the book though. Always, if you tell me the rules, okay. Now sometimes I didn't know, and you can assume, but always did it by the books, always was clean, was always trying to do things the right way. Um, and I realized it was bigger than me. And that kind of goes back to the working at GM. In some regards, that should have been my highlight. I made it to corporate America. My father worked at a Buick dealership growing up. So for me to be the Buick ad manager was a huge deal. I was in headquarters, corporate. My dad was at a dealership working the parts department. So this was a huge transformation from one generation to the next. But the reality that I started to see was that while it was great for me, I couldn't really impact the next generation or even my parents and the other folks in the community. And it was a missed opportunity. So I say transformation because with what we're doing in real estate, we can impact the residents' lives, we can create generational wealth. And this is something that I don't have to worry about somebody firing me. I don't have to worry about falling out of political alignment with someone and no longer being his guy and getting shipped off to some other department. So to me, that's huge. That's the transformation where we can keep shooting. I mean, we can miss and keep shooting, and that's the beauty of this thing, is that there's so much upside, and the downside is somewhat, it's mitigated. The downside is really mitigated. And I think the transformation of lives, of generations, of families, of communities, it's powerful, man, and it excites me, and I'm happy to be a part of it. And I believe that this is my calling, to help other people understand the power that, and it's not just real estate, but truly the power of taking ownership of your situation and taking the necessary steps to change that.
Transformation, my man. Mic drop if you could. But that was absolutely, I could feel that. That was real. And, that's the power of elevating, on a continuous basis, is that you can transform yourself on a daily basis. You can transform, not only a generation, but, maybe even more than that. And the ripple effect of what you do has an impact on so many others, whether it's your family, so on and so forth. And I know that you're doing that, John. And man, it's been a lot of fun to have you on the show today. Really appreciate you taking the time. Tell the listeners, how they can stay engaged with you and find out more about you.
Yeah, absolutely. So you can check us out twice a week on Target Market Insights. That's our multifamily and marketing podcast. And then we have our Midwest Real Estate Networking Summit coming up May 16th and 17th. Super excited for a great list of speakers that we have for that event. You can just check out MidwestRESummit.com to get more information there. And if you are interested in multifamily investing, one, Tyler's a great guy. You should talk to him about it. But if you want to see a sample deal, I do have a special download on our website of a sample deal package. Just go to casmoncapital.com and you can download our sample deal there.
Absolutely. We'll put links to everything in the show notes because you're definitely going to want to stay engaged with John. You definitely want to listen to his podcast and go to the summit, check out his website, download the free material because there's a ton of wisdom there. Obviously, this is the real deal here. And I want to encourage you to re-listen to the show, take notes. I'm sitting here taking notes because man, it's like, I need to start implementing. I need to implement, what are my non-negotiables? What can I automate? And, what's that big question? What are we moving forward? And what's preventing us from doing that deal this week? What's preventing us from, really moving the engine of our business and really kind of moving that to the top of the priority list? So I want to encourage you to re-listen to the show because repetition is key. Share this with somebody else because the teacher learns the most. That's really how you anchor in your own understanding. But of course, the most important is to take massive action because it's all about your mindset. It is about your psychology. But if you don't take action on the information, you have no power. And so, that's what it's really all about. And, what I would also encourage you to do is screenshot this show and tag John, tag myself, tag Elevate Podcast, tag Target Market Insights, and share this with somebody else because you have the opportunity of paying it forward. And with that said, John, thanks again for being on the show today.
Thank you for having me. This has been a lot of fun and continue to do what you're doing, man, and elevating the game.
Absolutely. Elevate Nation, thank you for tuning in, and we'll see you next time. This episode of Elevate is brought to you by CF Capital, a real estate investment firm formed by myself and my partner, Brian Flaherty, where we invest in multifamily real estate communities across the Southeast United States. If you'd like to learn more about our approach, our mission, our acquisition criteria, and how you can learn more about future opportunities, visit cfcapllc.com. Again, that's cfcapllc.com.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit tylerchesser.com.